Life insurance is not just about protecting your family in case something happens to you. Life insurance can be an asset that can turn into something amazing that you can enhance just about everything you're doing in your life with. It sounds a bit fantastic, I know, but let's get into that more in this video. Thanks for sticking around. My name is John Troms. This is Insurance Foundations, and I wanted to talk about how you can think about insurance as an asset class all of its own. If you've been following any of the major gurus, or if your financial plan involves modern portfolio theory, you have seen it mentioned you should have cash available in case you have a personal emergency in your family. Now, traditionally, people have said that the best places for that have been in a savings account or in something like a CD or some stocks that you could actually access and liquidate without any real financial hardship or any penalties imposed. Something they've overlooked, though, is that life insurance can also be set up to be an asset class that does exactly this. This is something I've become very passionate about in the last couple of years, is because I've discovered that if you set up life insurance, not to give you the most amount of death benefit in case something happens to you, but where you have cash growth in that life insurance policy, that cash is available for you to use at a moment's notice. And this is something I think people kind of forget about whole life insurance or permanent life insurance of any kind, is that because it has a cash value, you can take a loan from that or you can access that, and it's usually a couple of days turnaround from the insurance company. They have no problem with sending you a check in the mail the second you ask for it. So you don't have to just put your money into a low yield CD or an impossibly low yield savings account. You can actually put it into something that gets 6% growth and still has accessibility and gives you a death benefit in case something happens to you and can cover you in case you have long-term care needs when you're older. Looking at life insurance through the lens of an asset class now changes how we think about it. If you add on the bank line of credit, which is something I've talked about in some other videos, then you have access to that money. It can grow at 6%. And if you need it for any emergency, the money still grows at a difference of 2% from what you get charged using it. It sounds a little bit complex maybe, but it's actually very simple. And here's how it works. So you apply for life insurance. You start funding that with the money that you normally would set aside into a savings account or a CD for those emergency funds that everybody recommends that you have. Now, as long as you don't need it, that money continues to grow. What I would encourage you to do at the same time is open a bank line of credit. Now, there's only about 4 or 5 banks in the country that actually do this. So contact me at insurancefoundations.com and we'll find out more together. I can show you the banks that we have available that we've worked with, and you can pick the one that works out best for you. I'm not in the banking world and I don't get anything for that recommendation, but it's something that we offer. So if you open up the bank line of credit, what that means is you have access to whatever the cash value is of your life insurance policy through the bank. If you have a hardship and you need to use that emergency fund money, you take it out of the bank line of credit. It doesn't cost you anything to keep that open, by the way, so you can just leave it sit there. But if you need it, you can just write a check. It's just a bank account. It's just like a HELOC for your house in case you have one of those. So you can write the check from the bank line of credit, pay off whatever it is you need to pay off, use it however you need to use it. And the funny thing is from the insurance company standpoint, you haven't actually taken any money out. So the money in the life insurance continues to grow at 6%. Now, when you borrowed the money, it's getting charged 4%. Thing is that's 2% difference. Even when you're spending the money, even when you use it all up, you still have 2% growth in the life insurance policy above what you're getting charged in the line of credit. If we set it up correctly, and I can show you how to do this, you don't actually have to make payments to the line of credit. You can make payments to the line of credit from itself, which means that if we've set it up correctly and you've really done some good math, and there is some good math you need to do yourself, it's simple, but it does have to be specific. If you set it up the right way, you can use the money and pay it back when you can, when that hardship is over. You don't have to pay it off right away. So it gives you that ability to use the money when you need it, but have it grow at a real interest rate, 6%. If you've looked at CDs or at your savings account, you know that that's magnitudes more interest than what you're getting there. So instead of leaving that money sit and do nothing, put it into a life insurance policy. Have it grow. Have it become a real asset that also comes with death benefit protection and long-term care coverage. It's and on top of what you're doing now. Reach out to me at insurancefoundations.com. Set up a time to talk. I'd love to go over this with you in person and show you how this can be an addition to what you're already doing right now. And it can be that extra growth that gives you more options when you retire using money that you would normally just leave available for an emergency. I hope this was informative. Again, reach out to me at insurancefoundations.com. I can't wait to talk to you about this. I'm very excited about it, and I think you will be too. Have a great day.